Hello guys, and welcome once again to another YouTube video. So today's video is going to be a trade breakdown on the advanced fractal model concept I taught in my recent video. If you've not watched the video, I am going to leave the link in the description box. So as I always say, you start your daily bias from the daily time frame and you apply internal range liquidity and external range liquidity. So if price tags internal range liquidity, you are going to target external range liquidity, right? So when I came to the daily time frame, I realized that over here, price tagged an internal range liquidity, and then price went to read this external range liquidity, and price tagged this internal range liquidity that is over here. If I'm to zoom out, you could clearly see that there was this fair value gap that's price tag, right? And if you listen and watch my previous video very well, I said that you always want the reversal candle to finish printing, and after the reversal candle is finished printing, you can focus on trading the distribution, right? So when I came here, I allowed the reversal candle to finish printing, right? So this reversal candle happened on Monday, and I don't trade on Monday. I always allow the Monday's candle to finish printing, and I use it as a data to trade the following days, right? So now that our reversal candle is finished printing, the question that we have to ask ourselves is it a perfect candle 2 closure or not? So we could clearly see that it's a perfect candle 2 closure, right? Because this reversal candle took the previous candle's low and it closed inside the range of the previous candle, right? Someone will say that it also took the previous daily low. So why did I still expect price to move from there? So the reason why I still expected price to move from here is because of the idea behind the trade, which is internal range liquidity and external range liquidity. And also because we had a very nice reversal candle, a nice bearish reversal candle, right? You could clearly see that this lower wick is longer than this upper wick. And it therefore shows that as the market was moving from this zone, it was printing a nice bullish reversal candle rather. So it shows that as the market was moving from this zone, it was printing bullish fair value gaps, bullish fair value gaps, bullish fair value gaps, right? So if the next candle opens, it will come and tag those bullish fair value gaps and then move. Do you get it? So this was a nice bullish reversal candle. And that is the reason why, although it took the previous daily high, which we don't usually expect, right? We usually expect it to, if this is the previous candle, right? We just want it to take the previous candle's low and close inside the range this way. This is the ideal model that we want to see. We want to wait for the reversal candle to finish printing. This is the ideal model that we want to see. Do you get it? So that we can trade the third candle. But in this scenario, it took the previous daily low, close inside the range. It took the previous daily high, close inside the range. So you can say price was kind of confused over here, right? But then we will go back to the idea behind the trade. We know that we've raided external range liquidity, and then the market will come for internal range liquidity, and then go for external range liquidity. So because of the idea behind the trade, and also because of the nice bullish reversal candle that we are printing, by comparing the wicks, you could see that the market came here and then it went up and then it's printing bullish FEGs on the lower time frame, right? So now we want to trade on this third candle, which is Tuesday. Look at how it distributed after allowing the reversal candle to print. So for that one, you go to the 4-hour time frame, and on the 4-hour time frame, right, on the third day, which was Tuesday, right? Tuesday, because in the forex market, a new candle opens at 5 p.m. EST, right? You could clearly see that when we had that daily candle 2 reversal, right, that closed inside the range, you could see that we left a 4-hour fair value gap, right? And what is happening in this 4-hour fair value gap? We could see that when this 5 p.m. candle came, right, it didn't close inside the range of the previous candle. So because it didn't form a reversal or it kind of formed a reversal, right? But it didn't close inside the range, right? So because it didn't close inside the range, I term it as an imperfect candle closer. And of course, if you do not understand it, then you have to check the playlist section and watch the full playlist for the beginner section. You get it? So when we had that reversal candle, we didn't form a candle closer. And if you don't get a perfect candle closer, then we have to wait for the third candle to print to use it as a data to trade. Do you get it? So we could clearly see that when the third candle printed, it printed kind of a strong bullish candle, right? So that's signal to me that price is willing to move from this, and therefore I can position myself to trade this 1 a.m. candle. And I usually trade during kill zones. I don't trade outside kill zones, right? And you could see how price moved. Do you get it? Now I went to the 50-minute time frame. Now look at this. We want the 1 a.m. to be an expansion candle, right? And in my previous video, I said that if you expect an expansion candle when trading your Ttrades Fractal model, you want this expansion candle to do three things, right? The first thing you want it to do, right, is to tag a 50-minute FEG, right? Or to read a previous swing high or swing low, or you want it to take a previous 1 hour high or low, 1 hour candle high or low, right? And I usually use the 50 minutes for my entries, right? So we could see that when that 1 a.m. candle, which we expect to be an expansion, opened, it didn't read any swing point over here. It went ahead, and then we had some kind of fair value gap over here, right? So I positioned myself at where the fair value gap was, right? Because I want this expansion candle to do two things: to tag a 50-minute FEG or to raid a swing, because I expect it to be a bullish expansion candle, to raid a swing low, right? Or on the 1 hour time frame, I want it to raid a previous 1 hour low, right? Which we didn't get. You get it? It didn't even happen. So on the 15-minute time frame, I could see that price tag that FEG. So I positioned myself there and I placed my stop loss at this low. Do you get it? And then targeted a 4-hour liquidity, right? And you could see how price moved aggressively to the 4-hour liquidity. Or if you wanted to take a confirmatory trade, you could wait for price to tag that FEG, form a change in state of delivery, and then position yourself, right? But since we already know that an expansion candle is expected to do three things, then you can just take your trade from this fair value gap. Place your stop loss at the fair value gap's third candle low, and then target a 4-hour liquidity, right? If I talk about a 4-hour liquidity, let's go to the 4-hour time frame. Let's look at the liquidity. Do you get it? So I took partials here, and this was my full TP. According to YouTube, most of you watch the video and do not subscribe. That is the only way you can, support me. You get it? So like the video, subscribe, and also comment so that YouTube will show the video to others. We can all benefit from forex trading. Thanks for watching.